Hello everyone, welcome back to this channel. In today's video, I will discuss about Sukanya Samriddhi Yojana. Sukanya Samriddhi Yojana is a scheme launched by Government of India as part of the initiative of Beti Bachao Beti Padhao campaign. What is Sukanya Samriddhi Yojana? Sukanya Samriddhi Yojana was launched as a part of the Beti Bachao Beti Padhao campaign on January 22, 2015 by Prime Minister Narendra Modi. The objective was to encourage families to invest in the education of girl child and save for their marriage expenses. Eligibility criteria are: the account can be opened by parents or legal guardian of a girl child of age 0 to 10 years. That means any girl child below 10 years can have this account. A depositor can open and operate only one account in the name of a girl child under this scheme rules. That means one girl, one account. Parent or legal guardian of a girl child are allowed to open the account for 2 girl children only. So 3 accounts can be opened only if the firstborn or the secondborn are twin girls. In case there is triplet pregnancy or triplet born child and all 3 of them are girls, then all are qualified for this scheme. Deposit can be made by legal guardians or parents of the girl child until she is 18 years old, and after she turns 18 years old, she can operate the account by herself. The account can be opened by legal guardian or parents with any authorized commercial banks or with post office, and the documents needed to open this schemes are: first of all, it's the registration form, then birth certificate of the girl child, ID proof of the depositor or parents like PAN card, Aadhaar card, etc. Then residential proof of the depositor or the parents. What are the Sukanya Samriddhi Yojana accounts details or rules? First, SSY or Sukanya Samriddhi Yojana deposits account can be opened with a minimum deposit of 250 rupees and a maximum of 1,50,000. The deposit matures 21 years from the date of account opening or until the marriage of the girl after she attains the legal marriageable age of 18 years. After the girl child turns 18 years of age, 50% of the balance, that means whatever the deposited money, 50% of that money can be withdrawn to meet the educational expenses of that girl child, and the documents needed for that is proof of is admission slip or admission paper should be submitted to the bank. The depositor must make a deposit of sum between 250 rupees and 1 lakh rupees every year until 15 years from the date of account opening, and after 15 years the depositor need not to deposit any money, and this account can still earn interest from whatever the money deposited. And presently the interest rate was decreased by government to 7.6% per annum and is compounded annually. And if the deposit is not made every year as mentioned above, the account will fall under default. The account can be reactivated by paying a fine of rupees 50 per year that you defaulted on making a deposit, and the reactivation can happen until 15 years from account opening. That means suppose the legal guardian or the depositor does not deposit the minimum amount, which is 250 rupees for suppose for 1 year, then that account will become defaulter, and to reactivate that account again, the depositor have to make the minimum amount required, which is 250 rupees plus fine of 50 rupees, that is total 300. Then the account will be reactivated automatically. When the account matures on completion of 21 years, the interest accrued along with the balance will be paid to the child once he provides the following: Sukanya Samriddhi Yojana withdrawal application, proof of identity, proof of residence and citizenship, proof of age, and the balance can be transferred anywhere within India from one post office branch to another post office branch, or from one bank branch to another branch after the concerned parents or guardian of the girl child provides a proof of change of residence. Premature closure criteria. Premature closure of this account is allowed on the basis of: number 1, intent of marriage, and this one should be notified a month before marriage or up to 3 months after the marriage. And suppose the girl is dead or whose name is registered for this scheme, so in this case death certificate is needed and should be submitted to the bank, and then this account can be closed prematurely. Number 3, deemed closure due to change of status, such as change of citizenship and country of residence. After 5 years of maintenance of deposit account, if the bank or post office find that maintenance of the account is causing a financial burden on the girl child for medical reasons or death of a parents or guardians, premature withdrawal is allowed. That means suppose this girl have some medical conditions or some medical illness which make it a burden for her to maintain her account. So in case her parents or guardians expired, so in this case she can close she can close her account even before maturity. Tax benefits of Sukanya Samriddhi Yojana scheme. First, deposit up to 1,50,000 is eligible for deduction under Section 80C of Income Tax Act. And the interest earned and the proceeds from maturity of the deposit, that means the total amount you get for principal plus interest at the end of maturity is totally tax-free. That means they say it's EEE, exempt, which means tax-free on deposited amount. Whatever the amount you deposited is tax-free, and whatever the interest you earn, that also tax-free, and the total amount which you get, that means principal plus interest after the maturity, that also is tax-free, and the interest is compounded annually. Now I'll show you the calculation of this scheme in Microsoft Excel, so that you'll be clear or understand what value of your investment will be after 21 years or after maturity of this scheme. Now I will show you the calculation in Microsoft Excel. This is Microsoft Excel, and this is the calculation for this scheme, Sukanya Samriddhi Yojana, and this is yearly investment. Suppose yearly investment is 1,50,000, and the compulsory deposit is up to 15 years. So I'll show here the 15 years for deposit, and the maturity or the term of investment is 21 years. Suppose we start our investment journey in the month of April 2022. So this scheme will get mature in the month of March 2043, and presently the interest rate is 7.6. So this column is the total number of years or the maturity, and this is interest rate, and this is the opening balance. This is our investment. This is whatever the interest earned per year, and this is the closing balance after each year. So let's say first year the interest rate, it's this much, 7.6. 7.6 is interest rate. The opening balance, since we just opened, so will be 0. Our investment is 1,50,000 in a year, and the interest earned after 1 year will be, we can write equal to sum of opening balance and with investment, then close the bracket, multiply by interest rate, then click enter. So we get the interest rate, the interest earned after 1 year to be 11,400. Or we can also write like this. We can also write the formula like this: equal interest rate multiply by bracket opening balance plus investment, close bracket, enter. So it came to be the same, 11,400. So whatever you write, you will be the same. So I'll write it as formula equal sum of opening balance with investment bracket multiply by interest rate, and the closing balance will be sum of opening balance plus our investment plus interest earned, that is the closing balance after 1 year. So for the next year, since we'll consider this interest rate to be the same for 21 years, so we'll just double click here. So it came to be 7.6, and the opening balance for the next year or for the second year will be equal, then we'll click this cell F10, then click enter. So we get the opening balance here, and the investment we can also click here, double click, then it will come by itself. And here also we can do double click. Since we already put the formula, we just have to double click it and it will come by itself. Here also double click. And the deposit we have to make only up to 15. Yes, so here we can write 0. Then we'll click here. So we see our investment, its total investment after 15 years will be how much. So we'll calculate here sum of we'll see how much after 15 years, how much is it. Then close bracket. So after 15 years we invested 22,000 22 lakhs 50,000, and the total interest we get, it's 4,65,682, and the total amount of money, that is principal, this is our principal, this is the interest earned. So the total amount we get to be 65,93,071 rupees. So this is the total accumulated value after 21 years. The value of our investment will be 65,93,071 rupees. So I hope you understand, and if you like this video, you can share it with your friends, and you can subscribe to this channel for more videos to come.